Episode 4: State versus Federal Taxes. What Side Hustlers Need to Know, 280E edition. When it comes to taxes, state and federal rules are never exactly the same. And if you're running a business in a 280E affected industry, like cannabis, these differences are even more significant. The rules that help you navigate federal taxes under 280E might not line up with state policies, and that's where the confusion starts. Welcome to Taxes and Compliance for Hustlers. In this episode, we'll break down the key differences between state and federal taxes, what controlled substance businesses need to pay attention to, and how to stay compliant on both levels. Let's get into it. Before we jump in, hit that thumbs up button and subscribe to stay ahead of the tax game. Your support helps us empower more hustlers like you. Part 1. Understanding federal versus state taxes. Under 280E. Let's start with the big picture. Federal and state taxes are separate systems, but they don't exist in a vacuum. For businesses under 280E, the interplay between these two levels can be both confusing and costly. Here's how it breaks down. First, federal taxes. Under 280E, federal taxes are what you file with the IRS, and for businesses affected by 280E, this comes with extra challenges. Here are the key components. Income tax. Your federal income tax is based on the total amount you earn, minus allowable deductions like COGS. But under 280E, ordinary business expenses, like rent and marketing, are excluded, increasing your taxable income. Self-employment tax. If you're self-employed or a sole proprietor in this industry, you'll also pay 15.3% for Social Security and Medicare taxes. This can be a big hit, so plan accordingly. Quarterly payments. Many 280E affected businesses are required to pay estimated taxes quarterly to avoid penalties. These payments cover both federal income tax and self-employment tax. 2. 80E doesn't eliminate your ability to save on taxes. It just means you need to focus on the areas where deductions are allowed, like COGS. 2. State taxes, where things can get easier or harder. State taxes often differ significantly from federal policies, and this can sometimes work in your favor or against it, depending on the state. Here's what to look out for. States that don't follow 280E. Here's some good news. Certain states, like California and Colorado, don't apply 280E to state income taxes. This means you can deduct expenses like rent and marketing when filing with the state, even if the IRS doesn't allow it. States that mirror federal law. Unfortunately, some states follow federal 280E rules closely, which means you face the same restrictions on deductions. Knowing where your state stands is critical for accurate planning. Additional state-specific taxes. Some states have cannabis-specific taxes on gross receipts, cultivation, or excise sales. These add another layer of complexity that you need to account for in your pricing and tax strategy. Check your state's Department of Revenue website for a clear breakdown of how they treat 280E and any additional tax rules for your industry. Part 2. Sales tax and excise tax for controlled substances. Sales tax and excise tax add another layer of complexity to your compliance efforts. Let's break these down so you can collect and remit like a pro. 1. Sales tax. When and how to collect. For businesses selling products, whether cannabis or ancillary goods, you'll likely need to collect sales tax. Here's how to do it right. Physical presence versus economic nexus. If you have a retail storefront, you'll collect sales tax in that state. But even online businesses could be subject to sales tax under economic nexus laws, which are based on sales volume or number of transactions in a state. Registering for sales tax permits. You'll need a sales tax permit to collect and remit taxes legally. This is typically done through your state's Department of Revenue. 2. Excise tax, the industry-specific challenge. In industries like cannabis, excise taxes are often levied in addition to sales tax. These taxes are typically based on the quantity or value of the goods sold. Example, California charges a 15% excise tax on the average market price of cannabis at retail. This tax is collected at the wholesale level, but affects pricing all the way to the customer. Understanding how excise tax works in your state can help you price your products competitively while staying compliant. Part 3. State-specific tax strategies. Let's get specific about how state tax rules impact your business and what you can do to optimize your approach. 1. Tax-friendly versus tax-heavy states. Some states are better for 280E businesses than others. Here's what makes a state tax-friendly. States without income tax. States like Texas, Florida, and Nevada don't charge state income tax, which can be a significant savings for growing businesses. States that offer deductions. States like California allow deductions for expenses disallowed by 280E, like rent and payroll for admin staff. This can offset the federal tax burden. If you're planning to relocate or expand, consider how state tax rules will impact your bottom line. Second, unique state tax challenges. Some states have unique taxes that can catch you off guard. Here are a few examples. California's franchise tax. Every LLC or corporation in California must pay an annual franchise tax of $800 or more, regardless of profitability. Pennsylvania's business privilege tax. This tax is based on gross receipts rather than profit, so even low-margin businesses need to plan for it. Understanding these unique challenges can help you budget more effectively and avoid unpleasant surprises. If this video clarified your state versus federal tax strategy, give it a thumbs up, share with your community, and subscribe for more hustle-focused content. In closing, navigating state and federal taxes under 280E might feel like a maze, but with the right strategies, you can handle it like a boss. By understanding the key differences, mastering sales and excise tax, and leveraging state-specific rules, you're setting your business up for sustainable success. Drop a comment with your biggest state tax struggle. Let's start a conversation and build a community of informed hustlers. Thank you for watching Taxes and Compliance for Hustlers. If this episode gave you clarity and confidence, hit like, subscribe, and share it with someone navigating for long-term success.